Welcome to International Securities Exchange's podcast series.
And we at the ISC, of course, I'm a big part of the options education here. You can go to www.isc.com/FX. What do we have there? Well, we have Jason Ayers, who does our weekly outlook. We have Trading Central. You can sign up for the trading recommendations. We also have podcasts, and you see that URL. And we have the webinars each and every week. So Rob Booker will be back. I promise you Rob will be back. And we're also going to start giving, I'll be presenting on Sundays with other speakers where we're going to try to focus on sort of the subject matter that I spoke about today, options. So what we're trying to do is Tuesday have the market experts talking about how they think the market's going to move. And then Sunday would be a way that you could find strategies that you could actually implement, so how you can apply those ideas. And if you can't make it either of the days, which I hope you can, but if you can't, by the way, Sundays are going to be 7:30 Eastern Standard Time, so about 3 hours later from this presentation. So it gives you a chance to get started with the week. I guess Asia would be trading about by that time, and so we'll be giving a presentation. So we hope that it's well received. We've done a lot of work on that, but we think that it'll be very popular because now we have a two-pronged approach. We have not only the special guests, but we also have the options education to try to integrate all that information. So at this point, I want to thank all of you for coming, but now it's time for questions. So let me try to take some questions. The first question is ISC-FX options and pips. Well, 100 pips is going to be one ISC point. But remember, our product is dollar relative. So you're not looking at, I don't know where I forget my inversions here. But if you're looking at euro dollar and it's trading at $1, I don't know, 30 or something like that, 29, that means that we're trading at 74 on the dollar euro. So yes, I mean, the spot market looks at pips as what I would call in the equity R market pennies. So, 100 pips is a penny. 100 pips is 1 point, or 100 pennies is a point also. So you can look at it that way. Joseph wants to say that one slide. I didn't have 181. It should have been $1.81. Correct. Is there a minimum share? As Wilfred wants to know, minimum number of contracts. You could actually trade one contract. In fact, I would recommend that you trade small until you understand how it's trading. So what's the shortest time frame? Well, you could actually trade with 1 day to go. I would not recommend that. And like I like to teach is that if you have a recommendation, let's say that you have a forecast and something's going to happen in 2 months. Well, I like to buy a 3 or 4 month option because you don't want to be wrong just because you're off by a little bit on your timing. So try to give yourself a little more time. Joseph says he's seen that the pairs quoted differently. The reason that we quote them based on the U.S. dollar is for one major reason, because when you're trading options, if you had them, some being the U.S. dollar being the numerator and some the denominator, you'd have to memorize that and then decide, well, I'm going to buy calls in these because I thought the dollar was going to go up, and I'd be buying puts in the others because I thought the dollar was going to go up. That wouldn't make sense. So we needed to standardize the product because in the options market, we needed standardized. So we decided we would base it based on what is the U.S. dollar really worth. So what is the dollar really worth? We made it that it's U.S. dollar relative, and that's the reason there. So just to make it simple, actually. Carl, he's been looking into strategies like straddles. What's the bid-ask spread? Actually, in just about any option strategy, if you take two option positions and put them together, and trade them as a spread, your broker will allow that to come in as a spread, and more than likely you're going to get a better price than entering them as two separate trades. So that's a great question. I would recommend that you do it that way, that you can actually enter it as a spread, and you'll get probably a better price there. Just a word to the wise. What's happened in the last 4 or 5 months, it's really unprecedented. And then one caution, even in my own portfolio, you got to remember it's always about risk reward. And when everybody has the same position on, I'm not trying to say that you should trade always as a contrarian, although Rob Booker was recommending trading as a contrarian, let's say in in February, and then when I had him back in May or June, and he wasn't necessarily right on his timing, but he was really right on his direction. And if you're right, but everybody's with you, eventually everybody's going to have to try to get out of the trade. And I quite frankly think that's part of what's going on in the world right now, is that everybody has to get out of certain positions. And one of the positions they need to get out of is the U.S. dollar short. And so that's the problem. Another position they need to get out of is short the Japanese yen. So take a look at those. Watch the yuck. When the yuck stops dropping, maybe it's a better sign for the market. And watch the AUX, because the AUX, again, is a sign of the weakness of the Australian dollar, because everyone, or a lot of these trading institutions have been long the Aussie dollar and need to, because of redemptions, they need to get out. Question is, and I'll take 2 or 3 more questions if we have them. Question is from Val about leaps. No, we only trade out 10 months right now. In fact, we just added 2 new pairs just about 3 or 4 months ago. So we added the Australian dollar, which was obviously very useful in the market we're in, and also the Swiss franc. So the symbols there are AUX for the Australian dollar, and Swiss franc would be SFC. Just remember, this is dollar relative. So if you're talking about AUX, you're saying, how much is the dollar going to move up relative to the Australian dollar? If you're talking yuck, how much is the U.S. dollar going to move up versus Japanese yen? So again, when we're looking at yuck, we're seeing the yuck drop, which means that the dollar is dropping. Let's go back to the slide. Let's look at the euro, way back when. Let's take a look at euro. Well, we see euro in 2006 at 80, and then we see it go all the way down to, let's say, 62, 63 in June of 2008. I mean, that is some trend where just about, if you had sold the U.S. dollar anywhere along the way, you'd have done well. That's the problem, is that so many people all had the same trade on, and in fact, it made a lower low there in the summer, and many more people actually piled into that trade, and that turned out to be a disastrous trade, anyone that was shorting the dollar there. So we'll see. And again, Europe has a lot of the problems that the U.S. has. It's really up to you as the investor. What do you think? This is nice to look at where we are in the past, but really we're trading the future. So what do you think of the future, and how you come up with your own decisions is entirely up to you. I want to sort of turn it back and see if there are any other questions. And again, I do want to apologize that Rob couldn't make it. Any kind of comments or questions, please fill that out, because we really take your questions and comments very serious at the end of the presentation, that you can fill that out. This will give you a great baseline so that you can go back. You have a lot of information here that you can use as a reference to go back when you have a strategy. Okay, I think this is going to happen. I think that, some other forecast. You can go back to this presentation on averting disaster in the FX market, and you know that there's strategies here, and hopefully you can implement something that makes sense to you based on your own goals and your own risk tolerances. And if you're interested, we will actually have this presentation available on archive tomorrow if you want to listen to it again. www.ise.com/archive. We'll be back next week with some more webinars, and we're going to start on October 19th. We'll be doing 7:30 Eastern Time, 4:30 Pacific Time. I'll be giving a presentation that night on options education. So I want to thank all of you on the behalf of the International Securities Exchange. This is Steve Meizinger saying have a safe trading day tomorrow. And please stop back at www.ise.com/FX. If you have any other questions or any further educational needs, you can go to that site, sign up for the podcast, the webinars, all that stuff. It's all great and all free. Please sign up, and please trade safely. Have a great night, everyone. On behalf of the International Securities Exchange, this is Steve Meizinger saying good night.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.